How Toronto's and Canada's condo crash will never happen again. Let's look at Toronto's condo market crisis, and what the world can teach us about fixing it. If you've been following the news, you know Toronto's housing market is in turmoil, skyrocketing condo prices followed by a dramatic collapse. Today, we're exploring why the way condos are financed, built, and sold in Toronto has fueled this roller coaster, and how cities like New York, London and others do things differently, selling condos only after they're built. This could be the key to ending speculation and making housing actually livable. Stick around because this is a story of greed, market failure, and a potential path forward. Let's start with Toronto's condo market. For years, it's been a gold rush. Developers pre-sell 70 to 80% of condo units before even breaking ground. Why? Because those pre-sales secure the financing they need to build. The rest comes from lenders and their own capital. This model sounds smart, but it's created a monster. Investors, not families, have been the main buyers, snapping up units to flip for profit or rent out. According to Statistics Canada, 65% of Toronto's smaller condos, those under 600 square feet, were owned by investors in 2022. That's compared to just 44% for larger units, over 800 square feet. This investor frenzy drove prices through the roof. Condo prices in Toronto soared, with the average cost per square foot hitting $1,689 in the third quarter of 2022. First-time buyers and families couldn't compete with deep-pocketed investors betting on future gains. The result? A market flooded with tiny, shoebox units, think 400 square foot studios, designed for quick flips, not for people to actually live in. Developers loved it because pre-sales meant low risk. Investors loved it because they could buy low and sell high. But for regular people looking for a home, it was a nightmare. Then, the bubble burst. Since February 2022, condo prices have plummeted nearly 20%. Sales in April 2025 were down 30% from the previous year, the lowest since 2010, outside of the pandemic lockdown in 2020. New condo sales in the Greater Toronto Area crashed 57% in the first half of 2024, the worst since 1997. Why? High interest rates, caps on international students reducing demand, and a massive oversupply of those investor-owned microunits. There's a glut of unsold condos, 64 months worth of inventory at 2024 levels, nearly 6 times what's considered balanced. Investors are hurting too. A 2023 report found 77% of leveraged condo investors were cash flow negative, losing an average of $597 a month. That's up from 52% the year before. Projects are being cancelled left and right. 1,899 units were scrapped since early 2024, with some converted to rentals. The market's in what experts call recessionary territory. It's a mess, and the pre-sale model is at the heart of it. So how did we get here? The pre-sale system incentivizes speculation. Developers need to hit sales targets to get loans, so they market to investors who buy early, often years before completion. This creates a feedback loop. Investors drive up prices, developers build more tiny units to keep the cycle going, and end users get squeezed out. It's not just about affordability, these units aren't even practical for families. How do you raise kids in a 400 square foot box? Now, let's look at how other cities do it. In places like New York City, London, Berlin, Copenhagen, Barcelona, Tokyo, Paris, and Zurich, condos are sold only after they're built. No pre-sales, no speculative buying years in advance. Developers secure construction loans up front, often backed by robust financial systems, and build the project first. Once it's done, they sell to buyers, usually people who actually plan to live there. This flips the incentives. Instead of catering to investors looking for a quick buck, developers focus on quality and livability to attract end users. Take New York City. Developers there build first, then market to buyers who want a home, not an investment vehicle. The result: larger, better-designed units that appeal to families and long-term residents. London's the same. Its real estate market, while pricey, prioritizes finished projects over speculative pre-sales. Berlin and Copenhagen go further, with regulations that encourage affordable, end-user-focused housing. Tokyo and Paris blend new builds with heritage, selling post-construction to keep markets stable. These cities aren't perfect, but they avoid the wild price swings and investor-driven bubbles we see in Toronto. Puyan Safapour, president of Toronto-based Devron Developments, argues this build-first model is better for the whole ecosystem. He's right. Selling after construction cuts out the middleman of speculation. Developers have to think about who's actually going to live in these homes, not just who'll buy them on paper. That means bigger units, better amenities, and designs that prioritize comfort over cramming in as many studios as possible. It's housing for people, not portfolios. But here's the catch: switching to this model in Toronto isn't easy. Developers rely on pre-sales to manage risk. Without them, they'd need to take on more debt or find new financing models, which could be tough in a shaky economy. TD economist Rishi Sondhi points out that selling post-construction leaves developers vulnerable to market conditions at the time of sale. If prices drop or demand dries up, they're stuck. Pre-sales, for all their flaws, lock in buyers early, giving developers certainty. Moving away from that requires a major overhaul, new regulations, better access to construction loans, and maybe even government support. Still, the benefits could be huge. A build-first model would cool the speculative fever that's made Toronto's market so volatile. It would force developers to prioritize quality over quantity, creating condos that families can actually call home. It could also make housing more affordable by reducing investor competition. Right now, first-time buyers are up against cash-rich speculators who can afford to buy multiple units. If condos were sold only after construction, the market would tilt back toward end users. Let's talk numbers to see the scale of the problem. The average asking price for new, unsold condos in Toronto was $1,524 per square foot in late 2024, down 10% from $1,689 in 2022. That's a big drop, but it's still out of reach for most families. Meanwhile, the condo market's in freefall, sales are at historic lows, and cancelled projects signal a looming supply shortage. If we keep going with the pre-sale model, we're just setting up for another boom and bust cycle. Compare that to cities with build-first systems. In New York, for example, condo prices are high, but the market's more stable because it's driven by actual demand, not speculative bets. Berlin's housing policies keep prices in check by incentivizing affordable units, something Toronto desperately needs. These cities show it's possible to build condos that serve residents first, not investors. So, what would it take to make this happen in Toronto? First, we need policy changes. Governments could offer incentives for developers to build first, like low-interest construction loans or tax breaks for end-user-focused projects. Second, we need to rethink financing. Banks and lenders would have to get comfortable with higher upfront risks, possibly with government backing. Third, we need to shift the culture. Developers, buyers, and policymakers have to prioritize housing as a human need, not a get-rich-quick scheme. There's resistance, of course. Developers like the pre-sale model because it's safe. Investors like it because it's profitable, at least when the market's hot. But the status quo isn't working. The condo collapse is proof. Families are priced out, investors are losing money, and developers are canceling projects. It's time for a reset. Imagine a Toronto where condos are built for people to live in. Spacious units with room for families, designed with quality in mind, sold to buyers who want a home, not a stock market play. It's not a pipe dream, cities around the world are doing it. But it'll take bold moves to get there. Policymakers need to step up, developers need to adapt, and we, as a city, need to decide what kind of housing market we want. The Toronto condo market's at a crossroads. The pre-sale model fueled a speculative bubble that's now bursting, leaving behind a trail of unaffordable units and financial pain. By looking to cities like New York, London, and Berlin, we can chart a better path, one where condos are homes, not commodities. It's a big shift, but it's worth it. Because at the end of the day, housing should be about people, not profits. Thanks for watching. If you found this deep dive into Toronto's condo crisis eye-opening, give us a like, subscribe, and share your thoughts in the comments. Should Toronto ditch pre-sales and build first, like other cities? Or is there another way to fix this mess? Let's keep the conversation going. See you in the next video.